Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello, everyone. I'm Brian Love, head of banking and fintech at Travillian. Super excited about today's program. And the gist of it is, with the convergence of technology and banking, we are inspired by innovation and the future of banking. The banking climate requires creativity and a forward-thinking mindset to remain competitive. Travillian's Tech-Forward Bank Index originated in 2020 to shine a light on the leaders in the convergence between community banking and fintech. The index is comprised of a group of banks that are the most innovative, and they came together as a community. Our thought was, these are the banks that are all disrupting, and it's one place where we can look at most of those banks. Our index provides the opportunity to share ideas and showcase thought leadership to others in the industry who may be starting their own innovation journeys themselves. So we're extremely excited to kick back into high gear and introduce 3 new innovative banks onto Travillian's Tech-Forward Bank Index. Thread Bank, and here with us is Chris Black, Chief Executive Officer. Hi, Chris.
Brian, thanks for having us. Appreciate it.
You bet. FirstBank, and with us is Chief Innovations Officer Wade Peery.
Hey, Brian, thank you.
Nice to see you both again. And Stride Bank, with us is President of Payments, Jimmy Stallings. Hi, Jimmy.
Hi, Brian.
Well, we'll dig in. And Jimmy, since I introduced you last, let's go to you first.
Sure.
So let's talk about Stride. It's a bank many may never have heard of nationally, but you are behind one of the biggest fintechs in the country. So tell us how it all started and how you took a path towards these fintech partnerships. And then also tell us a little bit more about the payments solutions that you're providing in your particular division. And then the one thing I also wanted to ask you as my final question here is, how did the buy-in begin at Stride to get into something that was probably a complete pivot away from community banking?
Sure. Well, so I guess to talk about Stride, we go back, we were chartered in 1913 out of Enid, Oklahoma as Central National Bank and Trust. And we've always been a fairly tech-forward bank, at least starting in the 60s, where we were running our own ATM networks and ATM networks for other community banks in the area. We worked with Fed when they rolled out ACH. We were one of the first banks to embrace that in the 70s. And so naturally, I think, even though we're a community bank in rural Oklahoma, we'd always kind of had a tech-forward presence. And so as the industry evolved, we were engaged in what evolved into fintech back in the early 2000s, which was prepaid. And so, we had a lot of, again, looking at the market in rural Oklahoma, it was pretty evident to our CEO that through the bank's tie to oil and agriculture, which are the 2 driving economic kind of engines in that part of the world, that probably wasn't a good long-term plan, and we needed a way to diversify that didn't involve bricks and mortar in rural parts of Oklahoma. And so as prepaid started and we had all kinds of programs. I mean, we were our own processor for a while. We looked at different avenues. And so it was a very circuitous path, and one that our board was supportive of, because I think we all recognized that the future of community banking in rural Oklahoma was not necessarily as bright as some other areas. And so we started getting involved with these companies back, in the early 2000s. And honestly, at that point in time, I was an external board member, and we always joked because it was always the next big thing. And fortunately for us, we were in the right place at the right time with the right partners in 2019, as we started to scale with Chime is one of our big fintech partners. We also have programs with Lyft and DoorDash through a program manager called Payfair, a publicly traded company out of Canada. And there were definitely winners and losers through the pandemic, and luckily for us, the timing on several of those programs really allowed us to scale very, very quickly. And so we We feel like we've been in this market a long time. We've spent a lot of money investing in the infrastructure between our IT and our risk departments that we felt like were needed. So our board made the conscious decision to go this path again, probably 20 years ago, and continue to build out in that. And then finally, we like I said, just happened to be in the right place at the right time with the right partners. So it's worked out very well for us.
I appreciate that, Jimmy. And it sounds like the DNA of innovation goes back a long way.
It does.
So it's nice to hear that that has kind of, the torch has been passed. Let me turn it over to Indra.
Yeah, first of all, welcome everyone. I am Indra Langevin, Head of Strategic Advisory at Travillian. We will next go to Chris. Chris, tell us about FirstBank and how it came to be and why embracing technology is so important for your future of your bank.
No, thanks, Indra. So I think it's simple in our case. It's the reason for being. It's why we did this. So a group of investors, private, kind of traditional bank, private equity, fintech focused, folks with a lot of venture capital background, family offices, myself, kind of group of like-minded individuals came together with the mindset that where banking is going, where community banking is going, is no different than it's been for the last 100 years or more. It's always been about deposits, loans, capital, liquidity. We add payments into that. Maybe one day, we'll be talking about software on top of that, but that's what it's always been. But it's how do we deliver? That's what has changed all through the years. And so that's nothing new this time, right? That the delivery mechanisms of the banking products and services should change. And so we recapitalized what was Civis Bank, which was a very small rural community bank in East Tennessee. We did that back in May of 2021 with the express desire and really the strategy from day one to build embedded banking solutions, really Main Street solutions. These are our customers who either used to come to bank branches, still are, but they're not being well served, or perhaps have never really fit into a bank because the bank wasn't able to understand them. The bank wasn't taking the products and services to the customer where they are. And so that's been our mission from day one. So again, mainline, straight line, Main Street economy type ideas and products and services, but delivered to where customers are, where they're most efficiently accessed. And there's a tremendous amount of customer stickiness and really all types of good things that come from taking that approach. But that was day one. And the only way you can do it is fully embracing technology. A lot of that, is technology that's been around for many years, but has to be reconfigured, redeployed. And in other cases, it's brand new technology that has to be built and innovated from the ground up.
Thanks, Chris. Given your commitment to technology, could you just share with us, what does Thread mean to you?
Yeah, so the name Thread, we took a while to get there to really describe, but we wanted the name to describe what we do and who we are. And so Thread means simply to embed. Just like, a thread can either be woven into a piece of fabric as one thread at a time, but you can deeply embed into that. Or if you bring multiple threads together, you can actually create new fabric. So if we're bringing embedded deposits, embedded lending, and embedded payment solutions together, and that creates a fabric, a stickiness, like I talked about, and those things tend to accrue, but there's nothing new about that, right? This is relationship banking that's been in existence from the beginning, but deployed, managed, and scaled through the use of technology. But it's really the same exact. It's focus on the customer, focus on our platform partners, and how do we bring to them and deliver with them the type of customer experience that modern banking customers are looking for.
Great, thank you. I'll turn it over to Brian.
Well, it's funny. I was thinking, Mark Zuckerberg, they just created Threads, right? So I wonder if he's going to be knocking at your door like he knocked at Meta and took their name, MetaBank. So.
Yeah, he can always call if he'd like to.
All right, we'll make sure we'll tag him in the when we put this on social media.
No, you don't need to do that. That's all right.
No, I'm joking. Let's go to Wade. Wade, obviously I don't mean to insult you in any way, but FirstBank is a bank that few will say was or is currently a tech-forward bank. I mean, Chris just mentioned legacy, and you're the largest bank among this trio. However, the more we've gotten to know you, the more we've seen some of these, unique initiatives that you're pushing out and getting buy-in for across your organization. So I'd love for you to tell us what you're working on and how you've been pushing that innovation envelope at FirstBank.
Yeah, so thank you, Brian. And it's really not different. I mean, we all came from legacy institutions, right? And it happens that FirstBank was founded in we're 117 years old in 1907, so 6. And so, I would categorize us as being very entrepreneurial through the years. And I think somewhere along the way, entrepreneurial becomes innovative. And as we thought about things a couple of years ago in 2021, thinking about our strategic direction, I think we all as a leadership team just felt like, hey, if we're going to be relevant for another lengthy run here, it has to really look like innovation. We have to begin to lean into some of the technology solutions. And as Chris said, it's meeting your customer where they are. And so as we've evolved this over the last year or so, it's really come down to 3, I'll call them work streams that we think about. And one is just simply a venture capital fund. If you're going to walk the walk and talk the talk, you're going to have to put some money in play. And so we have seeded a couple of companies with, that align with some strategic initiatives and ideas that we've had. We have been part of Series A rounds. We've done several things in that space. And, from there, again, we think about embedded banking. I think just like these two guys, it's a distribution channel from our viewpoint. I mean, it's clear to me to see that fintechs are acquiring customers, and sometimes at a faster rate than traditional banks are. And it's because they are very focused, very segment driven, and very solution oriented. And so if you're competing with that, it's hard to ignore it. So we felt like building partnerships there in that space would be important to us, and it has. It's taken shape. Again, spent a lot of time and energy on risk and compliance resources to make sure we do that the very right way. And we think that's a non-starter. But the third piece of that, I think this is where the values really come back to the bank, is as as I have a team of folks who are out and about in the environment and learning and just visiting with fintechs and large numbers of folks. We also consult our business segments now. So it's an easy way to see the world come back from that, outside your own 4 walls and help this traditional bank along. So that's the way we're thinking about it. And I think that the key here is we just eventually flip the switch from entrepreneur to innovator. And I'm not sure there's a big difference in that actually at the end of the day.
And Wade, there was one particular fintech that you were dealing with, and I think it's public now. If it's not, you don't have to talk about it, but it was a particular asset class for lending that I thought really struck me as pretty ingenious and very niche-y.
Yeah, it's a company, the name of the company is Zippy MH. And so FirstBank acquired Clayton Bank in 2018. Well, Clayton is the Jim Clayton of Clayton Homes, who sold to Berkshire Hathaway. So we inherited a manufactured housing lending business, right? And most of that business is non-real estate, it's just chattel loans. So we noticed if you compared that business to buying a traditional home or even buying a car or an RV or something like that, tremendously high friction in that space. And it is a niche. No one had spent any time and energy on it, a very tightly controlled marketplace. And so we had begun the process of finding some folks to help us build technology and thinking about a company, another entity, and came across the folks from Zippy who had been flying in stealth mode for about a year and were ready to go to market. So it was just a hand in glove fit for us to bring our expertise, credit knowledge, and background, risk management to couple with the technology. So we did that, and that's been quite a nice outcome to this date. Those guys are doing. I just know this from last Friday. They've got 600 loans in their pipeline today, and that's from a start of 0 in October. So working quite well. We're really excited about it. And part of that thought process was we also did a forward flow loan agreement, a purchase agreement with them. So if you look at what it cost us to manufacture that loan versus what we can buy that loan for, I mean, it makes a lot of sense for us. So super happy with that one. But that was really our first endeavor, and we made a $10 million investment in that company. So we weren't kidding around on that one.
Wow. Well, thanks for that, Wade. I appreciate you telling that story. Indra, turn it over to you.
Okay, thanks, Brian. My next question is for Chris and Jimmy. What differentiates your business model versus the traditional banking model? Tell us, what is your primary objective? Is it for the digital transformation? Is it revenue diversification, cost optimization, or efficiency? What is your unique digital vision?
It's a blend, Indra, of, we're looking to be as traditional, you really deploy traditional banking practices, risk mindset, all of these things, right? This is what banks do extremely well. And truly what differentiates banks is that, along with FDIC, right, our ability to fund a business and a balance sheet with more security and with more certainty, and just from a customer standpoint, that advantage that gives us. After that, it's kind of like I said before on the principles of banking, we are looking to minimize to the maximum extent possible we can, both interest rate risk and credit risk. And so that's a different approach. And that means that we're not going to be someone who defines ourselves on the size of our balance sheet, perhaps, but more the efficiency of the balance sheet. What do we do? How do we deploy that balance sheet? And so that means we'll certainly deploy it in traditional dimensions, but I don't think that's going to be what separates us. What will separate us is our ability and the ability for partners to really count on our different risk profile and how that will be deployed. And I think the benefits of that, the intangible benefits that will accrue for years into the future, when we've changed our paradigm and we've changed our focus. And it's funny, in the banking world, we all know this, about the first or second question that is always asked or answered or offered is, how big are you? How big are you? And I don't think that is the winning recipe for the future for all banks. I think different banks can have different roles. And I mean, Wade describing Zippy, like I'm so proud of that. Obviously, I know the FirstBank team really well, know Wade really well. Got my start with Chris Holmes and the whole team at FirstBank. So I've got a very large debt of gratitude to that bank and their team. But to see that's the deployment, like, that's what I'm proud of. That's what every bank in this country should be focused on, doing that, on what do they do special, what's the value proposition, and then how can they utilize technology to differentiate and really enhance what they're doing and how they go to market, how they serve their customers. So it's different for every bank. And I think you'll start to see, like we're talking about, different pockets and different banks approaching banking in different ways.
Thanks. So how do you see, like, given where you are, like in 5 years, do you see a significant change in how you are going to deploy technology for your bank?
We like to say that we're evolutionary, not revolutionary in that sense. So yeah, I think when we look out 5 years, it's our ability to embed and to thread together, right, the various product offerings, and to give customers what they're looking for when they're looking for it. Amazon, I don't think any of us give many thoughts about how Amazon actually gets a package to your house from the click to whoever dropped it off. It could be UPS, could be FedEx, could be the USPS, it could be a contractor at Christmas time, right, when they're pulling up in their personally owned car. We tend to gloss over the immense amount of integration and all the logistics they've behind the scenes, and even the different channels of that final delivery that they have going. So it's more about the experience and giving customers what they want than maybe focus on exactly what the technology and how you got there necessarily.
Great, thank you, Chris. Jimmy, we'll go on to you next.
Sure. I think that, and it was mentioned earlier that, a lot of the fintech companies out there that have gotten traction and have been able to establish themselves in the marketplace are doing that because they're able to appeal to the consumer or the business in a way that traditional banking can't, or at least hasn't in the past. And so from our perspective, looking at what we were a traditional community bank, but didn't have a huge consumer presence, and leveraging these fintech partners that are really good at marketing and really good at innovating and figuring out what the customer wants, provides us a completely different avenue of, for most of the payment space, it's fee-based income. And it's a very nice part of our portfolio to be able to have fee-based income when we're in a rate environment like we are today, and we can take advantage of some of those deposits. And the corollary, or the hedge to that, is our mortgage group, right? So as rates tend to go back down, the mortgage market becomes busier. Still fee income, still good use for our balance sheet, but the payments world creates that balance to allow what we think about it as protecting ourselves against the rate environment, because we feel like we're in a good spot from a high rate environment, but as rates go down, then we're able to look at other parts of our portfolio, and as a bank, it's a good balance for us. As far as technology goes, the thing that we're able to leverage now is having millions of customers, millions of transactions, understanding a consumer in a way that we haven't before, or even a business or a gig worker. It gives us some insights into not only, the economy as a whole at some level. We see where the loads and the spends come from. We understand how those areas are trending. And from a bank that has traditionally had a regional footprint at best, now we've got a national footprint, and really can kind of understand the national economic cycles a little bit better. And try to leverage that both on the payment side and also on the fintech lending side is one of our strategic objectives, hopefully in the next 5 years. That we'll get. I think the banks that can do both are going to be in a very good position as we move forward.
Thanks. So just going back to your point on deposits, what's your competitive advantage in gathering deposit given the challenges that banks are facing today?
I would say the competitive advantage is having really good partners who know how to market and service accounts very well. One of the things we've done the last several months is explaining to regulators and networks how the crisis that happened in the mid-sized banking world was very eye-opening. But for us, where some of those banks had hundreds of accounts worth billions of dollars, we've got millions of accounts worth hundreds of dollars. We're kind of on the opposite end of that spectrum. So as we look at some of these banks that are seeing a runoff in deposits, our deposit mix is so much different because it is so small dollars but a large number of accounts that we really don't feel that's ever. I could come up with some doomsday scenarios, but it would have to be very severe changes to the economy at a very macro level before it would tend to have that kind of impact on our deposit base. So we really feel comfortable with that, and it's proven very well in the last few months in terms of our deposit retention. Thanks.
Brian, do you have anything to add?
Well, no, I was going to change the subject a little bit to something that's close to home. Obviously Travillian, in essence, is a recruitment firm for talent within the community bank space. That's what we do. That's what we do best. So I wanted to ask a question about talent. We work with a lot of tech-forward banks. Some of them are, further along than all three of you. Some of them are, just starting their journeys. We see a lot of banks that, they're community banks. They decide to get into tech-forward banking, BaaS, payments, whatever, and then it catches fire and it eclipses some of the current talent. And then there's a need for much more well-rounded talent to be sought after. We've done fintech president searches. We did 4 of them last year for tech-forward banks. So my question to you is, how do you consider your talent strategy when you're going to engage in this tech-forward strategy? Do you look at that first? Are you kind of playing catch up as you go? What is the talent strategy? And I guess let me go to Wade first, and then Chris, and then Jimmy.
Sure. I think it is this number 1A and 1B in our strategy, right? It's having the right people to help us build out the platform. And I think, we've been building at that for a good number of months now. We've had the benefit of seeing in the rear view of what happened to some of the banks that maybe didn't take that approach, right? And so we quickly really thought about this as a compliance legal first framework, right? If you get that piece in place, from diligence to building out your risk and your control mechanisms, I think that you have a winning recipe right there. I just find that there are so many really great fintechs out there that maybe aren't quite bank ready yet. And so I think you have to be willing to help bring them forward. And at the same time, I mean, it is to answer the bell of the regulators. But I think at the end of the day, for us, and you know, as you helped us with that, and so kindly brought us a really great person to help us head up that whole area. Probably the best investment we've made to date was on the people side, and we continue to build that out. So I'm a firm believer that you need the right talent to really play in the partnership space, BaaS space, I mean, any of it, right? So that's been our number one priority as we build this out.
Chris?
Yeah, similar answer, really. People is always, it's always the thing, whether it's business, community, family, sports teams, everything hinges on the people and having alignment, finding the right balance. And so that's what, as we started this effort, it was the recognition that banking is critical, and having bank expertise is the most important thing. At the same time, however, having a true balance and really strong kind of folks who have been entrepreneurs, innovators in technology, whether that meant they were driving the companies, they were managing risk, developing product, but people who are really from outside the banking world. And so that's what we found a lot of success in, kind of, being half bank, half fintech, or maybe 60% bank, 40% fintech. I don't know what the ratio looks like, but that's been big because it's, in the non-bank folks, we've brought them mostly from a background where they dealt with banks or dealt with regulated industries, and so these weren't foreign concepts. They knew this, but candidly, they didn't have kind of warped paradigms that's been warped by the banking system for many years. And so having the right mix of that, of people who are going to challenge the status quo, going to challenge those paradigms, but then strong leaders with the banking experience who understand how to shape and channel that industry. And so it's been very attractive for us. We're in Nashville as well, so a great place to live, and not the most difficult place to recruit people to come. So it's been a nice blend of kind of all those factors that, and then we've got people really in multiple states around the country who we've got great work from home capabilities and connectivity and interoperability. So really just a blend of all those things.
And Jimmy, before you answer, I realize these two guys are in Nashville, one of the fastest growing cities in the entire country. I know you're in Enid, you got OKC and Tulsa to your east, but in your response, I'd also love to hear how you go about recruiting talent if there's not like a hotbed, in your region.
Sure. Well, I guess the first thing I'd tell you is, while our bank is chartered out of Enid, I'm actually in Tulsa, and most of our executive team is in Tulsa or Oklahoma City for similar reasons. But I would say we have an operations center in Sioux Falls, South Dakota, and we've got a branch in Salt Lake City, Utah. And truly, it is because that's where the talent is. Those are where the centers of excellence for, if you look at payments in Sioux Falls, I mean, that really kind of evolved out of the credit card space. And then in Salt Lake, the fintech lending world kind of, between FEB, web. So those were the areas where we literally were strategic in trying to establish a footprint for recruiting. The other thing I would say is we do have people in Scottsdale and LA, and they are spread out, and the environment we live in, as Chris mentioned, where you've got a nice blend of work from home and actual office space is something that we've really embraced, and it creates challenges from a management standpoint that we haven't had to deal with before. But I think the technology's gone a long way in solving that, and now and people we try and make it a point to have in-person meetings quarterly, but so we can establish that human relationship. But it is something that has evolved, and certainly was not where the bank was at 5 years ago. But we've embraced that. And as far as just talent, I think what Wade said. I mean, you have to start with risk and compliance if you want to really operate in the space and not have regulatory problems or challenges. And there's a balance there between finding talent that understands what the evolution in banking looks like versus traditional banking. And so we have leveraged both folks that come out of the traditional banking world, folks that come out of the payments world, third-party processors, network people. All of those folks have been additions to what would normally be a traditional community bank. And we've, I feel like, been fairly successful in that, but that's really been the key, is looking outside of a traditional bank hiring pool and looking at some of our critical partners and the background and the education that folks have coming from those areas as well. So that's the way we've tackled it.
So I want to do something a little fun, a little bit of a lightning round on talent. So very quick responses. What are the most significant or which positions and roles or skill sets have you hired the most for within innovation? So Wade, why don't you go first?
So we have hired literally at the top of the food chain, right? We hired a dedicated compliance and risk manager, dedicated solely to innovation, period, and then staff underneath that.
Okay, so risk and compliance from you,
Yep.
Chris.
I think, I mean, from an innovation standpoint, product. So we have a chief product officer. Not many banks have that, and that's really kind of from a software perspective. We don't develop our own software per se, but taking the mindset and understanding what that looks like and bringing some real benefits to the bank's approach, the bank's mentality, has been a big win. But also, I think compliance and risk, BSA, all of that is absolute innovation, and it's required in this, which seems like an oxymoron from where I came, traditional banking, but you understand how critical it is in this regard.
And Jimmy, how about you?
Yeah, I would echo, our risk and compliance team have grown exponentially, and also IT. The traditional banking, where we still have, system administrators and network people and InfoSec folks, but hiring database administrators and programmers that allow us to utilize the vast amounts of data that we now have, and then building out. We don't build out a lot of our own software, but we've had to build out an ACH engine that allows us to manage ACH across 8 different, third-party processors, and to be able to provide those types of what are traditional banking services scale that not many banks are used to. So those 2 areas are probably the ones that we've delved into deepest.
All right, thanks for indulging me in my lightning round. But your answers are actually very indicative to the searches we're working on currently with our tech-forward banks. So that definitely tracks well. Indra, I know you had a question that offshoots off of talent.
Yes, staying on the topic of talent, I want to, pose this question to all 3 of you. Tell me, what is the secret or playbook for retaining best talent? I think I'll start with Chris.
Yeah, I think, same as it ever was in high-performing, high-paced environments. You've got to find people who have that flexibility, who have that dynamism, but also are seeking balance. And so we try to do that as much as we can, to find a balance for them, to really help people. And it's really by modeling. You can only say so much, but you have to do things, and you have to show, and you have to lead by example. So trying to do that. I try to make, every single one of my kids' sporting events in the morning, whether it's going to work out, making sure that people understand this is a marathon, not a sprint, truly. Sometimes it feels like it's a sprinting marathon, but you've got to take time, you've got to show people, and you tend to attract those people who they want to compete, but they want to do so in a balanced way. And you just have to show, you have to lead by example, and you can always do better. You can certainly always do better, but that's the approach.
Thanks. Next, I'll move on to Jimmy.
Sure. I think that providing a vision and then hiring good, smart people and allowing them to execute on that vision. And, us at the executive management level, it's our job to make sure that we can articulate where we're going, and that we can lay out the roadmap, and then let them do it and not get in the middle of it. And I think, kind of speaking to what Chris said, I don't need to necessarily have somebody that's in the office 8 to 5. I need somebody that's going to get the job done. And so as long as they're accomplishing the tasks that we set in front of them, then we just need to, we try and get out of the way and let them work. And our job is to make sure they have the tools they need and the resources they need to be able to accomplish the tasks. So that's what we've tried to do.
Great, thanks, Jimmy. Wade?
So I'll piggyback on what Jimmy said. I would have used the word vision. It's exciting to work in the innovation team in our bank because that's different, right? You get to see some things happen. And so for us, it's been vision, having a good time, Chris. I mean, balance in life. But I think what really there's nothing more fun than winning, right? So start stacking up wins, and we've talked about this, we've laid the foundation, and then now we're starting to see wins and results. And I think that's it's really fun to go downstairs and have a celebration when something really big happened. And so it's not different from any sports team or anything else. It's getting folks excited to get in here and work every day and having a good time and celebrating those victories.
My next question is on fintech bank partnerships. An EY Parthenon survey found that 40% of bank fintech partnerships failed to operationalize, often due to poor alignment of strategy and execution. So employing a structured framework to guide everything from people selection, strategy, and value realization can help banks for partnership success. How have you navigated the aspect of successful integration and partnership? I think I'll start off with Jimmy.
Sure. Well, as we look at potential partners, the first thing we look at is what's the product, and is the product good for the end user? Because if we don't have alignment with our values at a bank level and our partners' values and what they're trying to offer, then it's kind of a non-starter for us. The second conversation we have is about their risk and compliance department and what their risk appetites are. Because again, if they're looking for a product that's high rate or has got some type of predatory aspect to it, we're not interested in that. And more importantly, the fact that they don't have a compliance and risk team that has identified that and said, hey, this isn't a good product, to the end user, is something that's important to us. And we do see a lot of fintech partners trying to make the move from Europe or from other markets that are non-domestic. And our regulatory environment is just substantially different. So making sure that they have people that understand what they're getting into and that understand the asks that our team's going to have of them during due diligence and during implementation of those programs is pretty important on the front end. And my experience has been most of the time, that's not a long process. You get the answers to those questions very quickly and decide whether or not they're a partner that you want to move forward with or not. The ones that tend to get high-centered, I think, are the ones where we don't do our job. We don't do a lot of good due diligence on the front end and really listen to what they're telling us.
Great. Chris, would you like to weigh in on what Jimmy just said and add on to your thoughts?
Yeah, if I were taking anything away, that showed pretty poor judgment. That's all very spot on. I'd say the other thing that that we try to do because churn, right, turnover, whether it's an employee, certainly a partner, whether it's an infrastructure technology partner or kind of an end user partnership platform, that's a big deal. So the way that we think about, and we've evolved to this, but I've really started over the last 6 or 9 months embrace this, is we think of there are no differences whether physical or virtual in the branches of Thread Bank. So each one of our partners, we look at them as a branch. And so it's funny, early on conversations, as we're in the process of likely deciding that we're going to go forward, we'll have a conversation with whoever the business leader is, whether it's the CEO or someone else at the partner, and I'll say, congratulations, you're the newest branch manager of Thread. And the reactions are interesting, but I think appreciated of that's how we're looking at this. So there's one umbrella that spans our entire bank, from risk, compliance, operations, BSA, and really strategy. And so that's what we're striving to do. We've got a lot of work to do. We're a young bank, but really creating that homogeneity and uniformity of whether it's training practices, certainly the risk and compliance, but all of these things kind of normalizing them to feel very similar as what it would to all the good parts of branch banking, which there's a lot of good there. While we're trying to remove all the barriers and the things that inhibit innovation, but we want everyone to be bought into our vision, and really kind of skating to where the bank's puck is going. And that's a fully integrated suite of banking services that just happen to be in virtual branches, not in physical branches on the street corner.
Great. Wade?
Yeah, so ditto to all of that. I think the only thing that wasn't said that I would say is we also want to make sure folks are well funded, right? They're not going to run out of capital. And I think just what's been telling for us is, are they willing to take our feedback? Some are, some aren't. If they aren't, we're probably not going to have a long conversation. And the last piece of that is just simply, does it fit our balance sheet strategy and our business strategy? Or is it aligned in some way? We don't want to do things we just absolutely don't understand, or that would never, really be a part of what we do. So I would only add those few things to what they've already said, because I think they're exactly right.
Thanks, Wade. Brian, would you have anything to add?
Well, no, we actually did a whole webinar on it last week. It was all about fintech partnerships, and everything that was said here is kind of in line with that. I wanted to ask, fintech in general has been, the bubble, I guess people say, burst a little bit over the last 2 years with funding for fintechs, et cetera. And I'm wondering how that's affected your relationships with fintechs or your business in general. Jimmy, I wanted to ask you that first.
Sure. In terms of how it's affected our relationship with the fintechs, we've seen a definitive shift from growing at all costs to becoming profitable. And from us, as a banker, we love to see that, right? I mean, the concept of really working your business model towards organic, profitability versus trying to grow it to get some kind of theoretical valuation is much more in line with what we are used to in the banking world. The challenge, I think, has come in some of these relationships where they are now trying to develop additional revenue streams, which we're all for, but the speed with which they try and develop these and making sure that they are compliant and that we're not creating issues, that's been the challenge I think we have, as they try and innovate. There's a lot of, working in the gray areas is not really, that has a bad connotation, but I think a lot of times they're innovating products and developing products that just have never, the regulatory world hasn't seen or contemplated. So trying to, take a product in whether it's earned wage access or, a relatively low overdraft fee program, it's just trying to make sure that we're not running afoul of any rules, regulatory guidelines, and in a world that doesn't have a real clear definition. And so that's been part of the challenge we've had, but it's also, I think, why these fintechs are able to stay on, the path to profitability, is that they recognize they need some additional revenue streams, and they want to bring these products up. And I think at least our partners I feel like they always have the right intentions. It's just making sure that they're not unintended consequences or things that we haven't considered as we start to roll these products out.
Chris, I'll go to you next.
Yeah, things certainly have changed the last 6 months, no doubt. Even over the last 12 months, right? Before, you had the bank specific issues around the various failures with rising interest rates, and things change materially. I feel like we were more like a salmon swimming upstream initially when we started this endeavor, because we started with a risk first, a compliance first approach to the world. And that wasn't necessarily the feedback the marketplace or maybe the venture capital world was giving to a lot of the fintechs. And so those conversations, because we've held pretty steady through all that, and it's reduced friction around kind of what's required and what do you really need to be a serious long-term good partner in this. Things like where, a couple of years ago, that concept of a branch manager might have been looked at differently. And now, because it's in good faith, right? We're not trying to stifle innovation. We're actually trying to give them the tools to really be innovative, but ensure that they're fitting within the confines of what we need to fit them into. Just like you would have a great branch manager. They can go do all kinds of really cool things in their community, be compliant within brand standards, all those things, and really drive their business. That's what we're looking for. And so we've seen that, I think, it's been a hard fought victory. The market and the regulatory environment has helped a lot, but I think that's been one of the keys, over the development really over the last 6 months or so that we've experienced.
Okay. And how about Wade at FirstBank?
Yeah, so we're the newest in the space, I think, from on the screen, but I would tell you just the focus on capital efficiency from where we were when we first started conversations over a year ago with folks to today. We appreciate that. And I don't know, an incredible willingness to listen and partner with us as we've had an investment that turned into a BaaS partner that turned into an investment, and a BaaS partner that turned into another entity in a partnership. So just the full-on engagement has been really incredible, and just I think it's not lost on folks that experienced bankers, have a lot to offer. I wrote Chris's term down, work paradigm. We bring that to the room most days, but that's my running joke of I'm a recovering banker. I'm gonna steal that one, Chris. But I think just the for us, it's been, I think quite the change, and just a lot of headstrong conversations into, hey, I'll listen to you. So, and that's all a good thing, by the way.
Well, it actually sounds like almost like a net positive to the banks, what fintech went through this last year or so. So that's interesting to hear from all of you. I think we're going to have maybe two more questions. Indra, if you want to ask your question.
Yeah, so my next question is really like, what advice do you have for others who are trying to integrate technology and banking to embrace the future of banking? Maybe I'll start off with Wade.
I think I've been in this business for 30 plus years, and that answer isn't different than it was on day one. Whether you're delivering your services and we're delivering banking through technology or in person, it still comes down to, understanding what customers really want and need, right? I mean, that's who pays it. That's who pays the freight here. So I think, it's cool to talk about being innovative in a fintech partnerships and all those things, but really, I think using all that banking knowledge and historical knowledge and experience you have to really sift through all the things, as Jimmy mentioned earlier. I mean, just the common sense test of every idea is not a good idea. Some good ideas won't make money, and so being able to sift through all that noise to really find the things that you want to support and lean into.
Chris?
Yeah, just to add on to that, and like I said earlier with Zippy, the MH business that FirstBank's doing, I think that is, if you're a traditional bank who this is just a something new, right, a new strategy for you, I think that is the best example that I could give. And Wade and I were actually on stage last summer together at the Tennessee Bankers Association, kind of kicking off the meeting out in Colorado. And that was the exact conversation we had with a room full of, hundreds of bankers in Tennessee, some small, some large, some, really weren't sure what fintech looked like or was, and others already had programs running. And my point was, figure out what you do really well, what's differentiated. How do you build a risk compliance and management and regulatory culture around that? And go find partners who can help you break the paradigm of your physical, geographic footprint, if you will. Because in this day and age, there's no reason for that. Many, just like Jimmy was saying, are bound. If you're in a small community, there aren't many great opportunities for growth. You can maintain what you have, perhaps, hopefully, best case, but you should really be looking for new revenue sources that aren't new to your expertise. They're new geographies that are driven by your expertise, what you do well, and that there's value add that the bank is bringing. Maybe you're an agriculture focused bank, maybe you're a music focused bank, commercial real estate, whatever it might be. So take that and go find new geographies that are already built around your culture and your expertise.
Right. Jimmy.
Yeah, I think it's clearly echoing what Wade and Chris have said, is define a strategy. but think through what the implications of that are. And what I mean by that is, if you want to go through a digital transformation where you take your traditional core bank and all you're doing is adding online account opening and making it more of an internet-based bank, well, that's great, and that's one approach to innovation. We've chosen to use the partner banking model. I would tell you there are different challenges to each one of those. I think that as I look back, I mean, some of the things that we didn't anticipate were things like reconciliation. All of a sudden, we're reconciling, millions of card transactions. Well, that's not something our accounting department was necessarily set up for. So we've had to build that functionality. So I think obviously risk and compliance, IT, those are the things that we tend to think of immediately. But I think depending on what your strategy is, there may be other areas that you need to be prepared for, because the last thing I think any of us want is to get our banks in a situation where we've got growth and we've got, maybe even profitability, but we've also got a lot of real problems when you start looking at what has that done to the operational functions of the bank. So define your strategy, recognize where your weaknesses are, beef those up, and then execute is what I would tell you.
Great advice. Thank you. Brian?
Well, just on that response, it's such a great response, Jimmy, because, we talked about risk and compliance where most of the hiring seems to be happening now. But when you have that, a clear strategy, and you guys are kind of like, you guys have been doing it for a while. When you have that strategy, maybe you can think through who to hire along the way. But a lot of banks kind of do it reactively as you go, But no, great response by all of you. So I'm going to just bring us to a close. I'm going to ask one last question, and this is the most important one. And this is ridiculous, but I'm just going to ask it. Why not have a little fun on a Monday? What is your favorite movie? Wade?
Tin Cup.
Chris?
Iron Eagle.
Jimmy?
Man, I'm gonna have to go with Caddyshack, but
you know what? Those responses tell me everything I need to know about each person that responded. Awesome. Okay, so bringing it to a close, I just want to thank you all again, Wade, Chris, Jimmy, and Indra. Thanks so much for joining us today. We're so excited to have Thread, Stride, and FirstBank on our Tech-Forward Bank Index. And just want to wish you all best of success in your future endeavors. And look forward to future conversations and interactions. Thank you.
Thank you, Brad. Thank you.
Appreciate it, guys.
Thank you.